But now I'm going to be joined by 4 of our friends. I'm not sure if they're friends with each other, but they're going to be forced to sit next to each other up here on stage. Let's welcome our ATS panelists today. Everyone give them a hand. Okay, it's time to get serious. Okay, so this panel is here to discuss business models for alternative trading systems. So we've discussed many things over the last last day or so, and this last panel, this last presentation that I gave, that Noreen gave, was about the use of ATSs as an alternative to M&A or IPO. Okay, so that sounds like a great idea, but how do I work this? So I've brought together an esteemed panel of builders of ATSs. And what I wanted to do is to give them an opportunity to explain to you how they are similar, how they're different, how they work with you, how they decide who to work with, why you should work with them. And because they're all ATSs, but you know what? They're all a little bit different. And that's good. That means choice for you all, because this is not a monolithic industry. It's an industry which is built on choice. And as entrepreneurs, you're going to get a choice of who to work with in terms of platforms, fundraising, and then secondary liquidity. So I'm joined by Pat LaVecchia of Oasis Pro Markets. Great to have you, Pat. John Pigott of ABE, or A Better Exchange. Solomon Tesfaye of tZero, and Richard Johnson of TEXURE Capital. Welcome, guys. Thank you. So let's help this audience understand, one, what you do, how you got there. Spend a couple of minutes. What's your background? How did you start Oasis Pro Markets? And we want your story.
Great, thank you, David. Can everyone hear me?
Yeah.
Not sure? Okay. Pat LaVecchia. My background is Wall Street. I ran groups at Bear Stearns, JP Morgan, and Credit Suisse. About 4 years ago, I was introduced to crypto. I went to a conference. I was invited by a friend of mine, a VC from Europe, and it was about blockchain and crypto. And there were about 30 of us in the room. And to my left was head of innovations for MasterCard at the time, and to my right was a member of the innovations group at Goldman Sachs. So I thought to myself, okay, there's something happening here. And I started delving a little deeper. And what came out of that was I ended up partnering with one of the major DeFi players. And DeFi is decentralized finance, for those of you who are not familiar with it, a collateralization ecosystem called MakerDAO. And Maker and I partnered and went down the path of real-world assets into the DeFi blockchain space, utilizing an ATS. So our ATS, I'll just give a quick overview of our ATS. We're approved for many things because we don't really know where the tipping point's going to be. That's our opinion in regards to what happened with crypto over the last 5-6 years. In regards to digital securities, there will be a tipping point, but it could be a variety of different securities. So we're approved for equities, public, over-the-counter, and private, fixed income, all corporate bonds, asset-backed securities, SEC-registered closed-end funds, normal funds, private funds. We're about to get approval for a variety of other instruments like ETFs. We'll be setting up a separate yeah, I can't call it an ATS, but a matching engine for derivatives and swaps as well. So we're going down that path, and the real differentiator that we have today, and eventually won't be a differentiator, is we were approved for digital cash for digital security transactions. So what does that mean? That stable coins, CBDCs, we actually got approved for CBDCs, and I don't know if anyone knows this, but there aren't any CBDCs yet.
Good.
But we got approved for it. And so because we knew it was coming. So
you don't have to go along with that. You can just let people use regular money.
we can do that too.
Yeah, that's good.
By the way, I'm just talking about the differentiator. We can do fiat as well. Yeah. So, and Vertalo's a great partner. And by the way, Dave, thank you for inviting us. This is fantastic.
Thank you for being here.
And I've met with many of you, and it's just very exciting seeing that this ecosystem is growing. But digital cash for digital securities. Last week we announced with one of our partners, a custodian by the name of Anchorage, if you're familiar with them, that, and we're approved for what's called the 3-step process right now. We'll eventually be able to do self-custodial wallets as well, but Anchorage can do what is called an atomic swap, so instantaneous settlement. Now they can do that on the fiat side because everything's within a custodian. We'll be able to do something similar, maybe end of day. Is that important for a private equity security today? Probably not. But eventually it'll be ubiquitous. So we're a little ahead of the game on that.
That's great. Thank you for that.
Yep.
John, I don't know if enough people know you here.
Nobody knows me. Just you, Dave. You're the only man I know. No, a little bit about, in keeping with the Star Wars theme, that was Darth Vader's theme, wasn't it?
I think it was.
I think he's saying something to us, Solomon. None of it good.
He has a view.
I'll have to admit to my dark, swarthy past. I started out as a lawyer. First 2 years, I was the public defender in the poorest county in the United States, which was fun. Went into corporate finance practice from there in New York and DC for several years. When the SEC promulgated Reg ATS, creating this new form of exchange in March of 1999, I'm told my signature was on the first application. So my idea was to use an ATS to create an electronic execution market for the bond market. It was an original idea for about 3 days. So with that huge first mover advantage, by the end of the year, there were 92 competitors. 5 years later, there were 2 of us. We sold to ICE, Intercontinental Exchange, which also owns the New York Stock Exchange, Singapore, Merck, Euronext, bunch of stuff. Yeah. My background was then in building capital market infrastructure, specifically in the market structure side. And we had 17 different categories of debt. We had U.S. Treasuries that would trade on an average day, 2,000 trades per second, every second for 10 hours. On the other extreme end, we had 1.6 million U.S. municipal bond deals, each of which trades 3 times a year. And so we got a lot of experience, a lot of flexibility from the regulators in designing the market structure uniquely to handle each type of asset. And I think that's something that ATSs and what Dave's doing and what all of us people in this room are doing that can bring a lot of value to the small cap market in particular. In June of 2010, I was introduced to Bitcoin, and I looked at it, I'm like, it's either the greatest scam in the history of the world, or it literally changes everything. 80% of what we do in capital market plumbing is check third-party licensed, government licensed databases. When I go into Schwab.com and sell a share of stock to Solomon, between 25 and 60 separate third-party licensed databases are checked in real time, in milliseconds. Each one of those are for-profit companies. Each one of those have a big compliance burden. It's very, very expensive and cumbersome. It's why some of our trades don't get cleared for days. If you can establish trust with math, holy cow, it's a big deal, cuz. And I know we all understand it's a big deal, but in terms of perspective and context, if you add all the crypto in the world together, it's maybe $1.5 trillion, $2 trillion. It's a lot of money if it's mine. It's a lot of money if it's Richard's. In terms of capital markets, that's barely even an asset class. And so we have to keep in mind that what we're all building on the tokenization of securities side, the total addressable market is the $770 trillion that that are currently circulating in compliant capital markets. So 3 years ago, with my team, we put a team together to, if you can imagine the measure of this, to simultaneously have registrations for securities exchanges in 62 countries around the world. So as usual, my day started with a 2 a.m. Zoom call with regulators, which each of them, by the way, I have a $1 bet with each one of them, that 10 years from today, this is how we start off the conversation, 10 years from today, you will not just allow distributed ledger technology in your capital markets, you will require it. What this industry is building is so superior to the entire infrastructure in the global capital markets. I'm telling you, I built some of it, and every time I really dig through it with a new team member that have experience in capital markets, they are still to this day stunned at how much of this junk we can clear out. So I know the industry, recently announced we topped $1 billion in STOs, and capital markets, generally people look at that like, there's nothing to brag about. That's a shopping mall in Tulsa, all right? Don't worry, all right? The bond market was supposed to adopt electronic trading in 2001, all right? It went from 0.5% to 0.6% electronic trading by the end of the year. All the companies got scrapped. 5 years later, 2 of us own the market on it, and 60 to 80% of every bond trade of every market's bond trade is electronically executed now. This technology is inevitable. What tZero's building, it's absolutely inevitable. What we're building in the global market, all these. The marketplace is so large that each of our companies, in fact, every company in this room operating in the sector, could never speak to or interact with any of the rest of us ever again. And every one of these companies could build a $100 billion company. The market is that large. So that's what we're keeping an eye on. We're going to launch our US ATS, which is licensed. We'll launch that in Q1. And through the rest of next year, every month or two, we'll launch another couple of licensed exchanges, ending next year with a single global IPO, stock and bond market, that reduces the cost of listing and trading by at least 95%, that operates on a 27 schedule, and that's available to everyone.
Great. I'm Solomon Tesfaye. I'm the head of business development and capital markets at tZero. First of all, thank you, Dave, for having me. This is an amazing event. I can't think of one time that all of the ATSs have been on a panel together, so this is definitely a unique experience. And then in terms of how I got exposed to digital securities as a whole, I actually had an investment banking background. So 3 years ago, I was working at Citigroup and then had no clue what ATS was, didn't know about digital securities, had no exposure to crypto whatsoever. The previous CEO actually approached me. He was trying to build out his capital markets team and said, hey, you really need to come to this private markets platform. I was thinking immediately EquityZen, Cadre, a Forge, one-time recapitalization or a private placement that they host on their platform. Then he introduced me to ATSs, where you can actually facilitate ongoing trading of private securities. Having worked on a lot of private placements and IPOs, I knew that there was this massive delta between private securities and public securities, and if there's any way to actually allow private securities to trade in a continuous manner, it'd be transformational. So fast forward, I joined the firm, and then we built out the capital markets team, and really tZero from the get-go, we were one of the earliest players in the market. We went in M&A mode. We basically bought a number of broker-dealers. So the 3 broker-dealers that we own, most people are familiar with the ATS, but we also own what's called SpeedRoute, which is a routing and execution business. It routes about 30 billion public equity shares on an annual basis, so 1.5% of the traditional equity markets, and it already services 125 broker-dealers. So we wanted to buy that so we would have institutional connectivity, so you wouldn't have to depend on one investor at a time building liquidity organically, because we wanted to have liquidity in our lifetime. And so what we do is we get those broker-dealers to subscribe to our ATS, D.A. Davidson, Piper Sandler, those type of middle market firms for the most part, to add the liquidity to the platform, and then they decide which tickers they would like to support on the platform. But aside from that, we also have our retail broker-dealer, which we did organically build, tZero Markets, where investors go through the typical AML, KYC onboarding process, very similar to starting like a Schwab or E-Trade or Robinhood account, and they have access to any of the assets trading on our platform. And then completely bifurcated from our securities business, we have the crypto business, which is right now growing rapidly, but we are in Q4 going to unify that experience. So if someone wants to go from Bitcoin to private real estate or any other asset, they'll be able to do so in that unified experience. and we've been approved for public securities as well. So also we'll have one unified experience where you can go between any of these different securities or crypto in one unified kind of platform, if you will, and by the end of this year. So really, the goal of tZero is really kind of to bridge the gap and reduce friction between different asset classes, but also just bridge the gap between just private and public securities in general. So that's, in a nutshell, what we're trying to accomplish.
Great. I would like to echo thanks to Dave for organizing this and putting together a great conference. Yesterday morning, you said to everyone, you said, this is the smallest the room will ever be. And your prophecy was proven true in one day. So well done. There's such tremendous energy in this room with everyone I've spoken to, and there's a real sense that this is the beginning, the dawn of a new era. And so I'm going to tell you a couple of stories about the dawn of another area. When I first got into electronic trading over 20 years ago, it was shortly after Reg ATS was originally implemented, and I was at a company called ITG, one of the pioneers of electronic trading. Electronic trading was maybe about, depending how you counted it, 5 to 10% of US equity volume. It's now basically 100%. But this is what we had to deal with, because the technology was so new, but it was still better than what was out there. So these are some things we dealt with. We'd get a program in, like end of the quarter. Somebody would say, BGI's got a program. They're sending in the program. Where do they send it? The fax machine. We'd run to the fax machine. We take off a page each and have somebody behind us call out, buy IBM 300,000 or whatever it is. And we'd be typing it in. We'd merge the portfolios, and then we'd put it into one of our algos. And that was cutting edge. We had this technology at ITG called algorithmic trading, which is like I said, it does all trading now. But at the time, it was very cutting edge. And we had this, you couldn't run it on a PC. You had to run it on something called a Sun Ultra 10 workstation, which is a Unix operating system. And there was no communication protocol there's no fix, if you're familiar with that term. So what we would do, we'd put this hardware onto people's desks. We had a guy at the company, and his job was to demo it. But you didn't really have laptops then, certainly not Unix laptops. So he would walk around New York City with a trolley, with a Sun Ultra 10 workstation, and a monitor, and taking it to people's offices and demoing it. His nickname was the Mule, and it's still the Mule. And we had a client in Indiana who had one of these workstations. They didn't have internet connectivity there. So he connected to the market via my company via satellite. This is really making me sound old. I'm not that old. But he was connecting via satellite. Now, the latency going up to the satellite and back is 6 seconds, right? And he was extremely profitable with 6 seconds of latency. Nowadays, what are we talking about? If you recall Flash Boys, when that story came out, they put a speed bump into the routing that was 300 microseconds. There's 1,000 microseconds in a millisecond and 1,000 milliseconds in a second. So we'd gone from 6 seconds being okay to 300 microseconds being controversial. Anyway, so what we're doing here, it feels like that. It feels like we're at the dawn of this age now, and we haven't figured out everything, but we're getting there. We need to we need to do a better job of settlement, like bringing in stable coins for settlement, but we're going to get there. I think we can do things around consensus settlement, bringing in all these cool innovations from DeFi into the space, and that's where we're going to get to. So that was where my background started. I followed through in electronic trading through to 2014, when it had become so ubiquitous. I was looking for something different to do. Found Bitcoin, went down that rabbit hole, and did some consulting for a few companies. I was a market structure analyst for another firm for a while, covering the space. When I got the idea to set up TEXURE, we are a digital securities broker-dealer, like these other guys here, focused on private markets. We help companies raise capital in private markets. We do tokenization, and we have an ATS for secondary trading. We went live earlier this year. We have a few deals on the platform. We're announcing a new one tomorrow, so stay tuned, everyone. And a little bit about our model to kind of give you a flavor of how we approach the market. Our ATS is a call auction model. We take the opinion that we're still dealing with private markets here. They're not going to be as liquid as Bitcoin, and they're not going to be as liquid as Apple or Google. And the call auction process, we feel, is a better way to concentrate liquidity at a point in time. So we can run a call auction. We can do it once a day, twice a day. We can do continuous auctions. We can run company auctions. So, okay, XYZ, they're doing an auction. Everyone get their orders in on this date. And that's our approach right now. As we build the liquidity, we think that's the best approach for the market today.
That's great. You guys, you're all coming at this market slightly differently, right? So, Pat, you are focused on what sort of client? What's your ideal client? If you could pick one, who are you best suited for?
Well, our focus is liquidity. And our product categories, I mentioned a wide breadth of product categories. It's really about liquidity. So we've engaged market makers on the equity side, as well as fixed income side, et cetera. I would say we haven't launched yet. And just to echo some of the comments here, this isn't a revolution, it's an evolution.
Yeah.
I said yesterday, I think in 10 years, this is all going to be ubiquitous. And some other comments I've said in the past is blockchain is a Ferrari with bicycle wheels right now. And eventually, we'll get the real tires on it going forward. But our ideal client is, I'd say, 20 million on up. I'd say the average, we have at least a little over a dozen issuers ready to go when we launch toward the end of the year. I'd say the average size is 50 to 100. We can raise capital. We can do a capital raising platform, but we've got a lot going on in terms of partnerships. So our focus is really entities, companies that have raised the capital themselves already. So to us, that's what we're looking for today. Eventually, we'll build out our team further. We'll do the capital raise, which is what I've done my whole with the big banks. Those were the groups I ran. I ran global private equity placements, and we'll be doing that. But we're really focused on liquidity. We're coming out with products. I mentioned derivatives, swaps, hopefully total return swaps as well, and subject to the SEC and Gensler. But our focus is we want trading. It's interesting, Richard has an auction approach. We're a matching engine, instantaneous. So there's an order book, if you're familiar with that. And our focus is, so as we look at companies, there are great companies out there, but if it's not going to trade, I'm not interested in a $25,000 or $50,000 listing fee. That's not our model. Our model is trading, transactions. So we're going to have a high bar today that, and these other ATSs, maybe I think would be great to handle it for you. But I'd rather have high liquidity products trading rather than a fantastic management team and company and it trades once a day.
Yeah.
So that's our focus.
Yeah, I get it. I want to move over to the other side to Richard. Now, Richard, you have an announcement Tomorrow?
Yeah.
Okay, so you're going to announce that tomorrow?
Such a tease.
I'm on another panel tomorrow. We can do it then.
Okay.
Such a tease.
So you've got a different approach than Pat, right? And I'd love to hear, kind of your take on this versus Oasis
I
Pro.
mean, a little bit of a different approach. I think we're very strongly aligned on 99% of things. But yeah, we chose an auction model for this. We've, I've worked with ATSs for most of my career. My two co-founders and I come from a company called Liquidnet, which you may be familiar with. They were a very successful fintech company, just did an exit. And they revolutionized institutional trading of large blocks of shares. So if you're trading on an exchange, the average execution size is something like 112 shares. Well, for lots of larger institutions who want to trade 100,000, 200,000 shares, that can be frustrating for them. So what we did at Liquidnet, we built a matching system, allowing them to cross these large blocks and find liquidity very easily with minimal market impact and signaling and so forth. One of the people who helped invent that ATS and that matching mechanism is one of the named inventors is John Howland, my co-founder. He's sitting over there. Put your hand up, John. So we've been around these markets, and our opinion is that these are still going to be private companies. They're not going to be as liquid as the most liquid securities. And this is a great way to really concentrate liquidity and give a great outcome for everyone. Now, I'm not ruling out moving over to a continuous market. I think we'll probably do that fairly soon. But at this point, that's what we're live with right now.
So Solomon, last week, you all had something pretty memorable happen at tZero. You want to tell people about?
I assume you're referring to Exodus?
Maybe that.
There we go. So I guess just on the first point, we'll work with issuers everything from 5 million to we have issuers that are doing 500 million. It really just depends on asset class, because naturally if it's 5 million, we'll lean more to the conservative side, like agriculture and some of the real estate tangible assets, as opposed to pre-commercialized businesses. But the deal that Dave's mentioning is Exodus. So Exodus did a Reg A Plus offering. For those that are not familiar with it, it's basically a capital raise that you could target retail investors up to 75 million. And basically, they target their own user base. They service 1.25 million users from a crypto wallet perspective. So they're a technology company, and they wanted to be able to solicit to those retail investors and encourage them to invest. So within 9 days, they raised the 75 million, because in the 200 countries they operate, and all the crypto wallet users they support, they have about billions of crypto within those wallets. And then they were substantially oversubscribed. They were about 10 times oversubscribed for that offering. And we found that very attractive, because all those investors that missed out on the primary would want to have access on the secondary. And so we onboarded that asset. When they onboarded, they had about a 710 million valuation, and they were floating about 75 million of that equity on our platform. And they've experienced some meaningful price appreciation on the platform. So it was a nice success story, because this is a growth company that would have alternatively gone toward the venture capital route, not democratized access to this particular private asset if they had went the traditional route. But now it's actually trading, it's live in a frictionless manner. You can buy Exodus shares as if you're buying Tesla shares or Apple shares. So that's really what shows transformational about this. A lot of people get lost in like the blockchain component of this, but that's like when NASDAQ introduced electronic trading. Now it's the norm. Right? So this is just an evolution in technology, as someone else mentioned earlier, where this is going to be the norm, where private securities are going to trade. There's certain things that are more conducive for secondary trading, but a lot of the issuers that we're working with, especially on the real estate side, they just view this as a very attractive in terms of an elegant solution for their redemption program and just removing friction. And these GPs don't want to have to deal with their LPs looking for liquidity at later stages than they originally agreed to. And so this is a nice, graceful way of handling that on the back end, whether it's on real estate or whether it's on a unicorn that just views this as an attractive opportunity to trade and a lower cost of liquidity. And they just don't want to be subject to the public scrutiny on the actual public markets quarterly reporting, as opposed to semi-annual and annual reporting and so forth. So this really kind of gives you an interim solution, as opposed to being public or prematurely selling your asset because your LPs are looking for liquidity a little bit earlier than you had planned on giving them.
So John, you just humble bragged that you were getting up at 2 a.m. to make wagers with regulators, okay? Which is very interesting.
That's nothing to brag about.
It's
an admission of how boring
right?
I am as a human.
Should we all be so boring? So given that you're looking at doing this in so many different markets in so many different ways, how does that make you similar or different to these folks?
Right. Well, I think all of us are trying to approach fundamentally those companies and issuers who are not being properly served by today's capital markets. So one thing that follows up that really resonated with me about your presentation a few minutes ago was, from 1950 to 2005, the United States did between 200 and 600 small cap IPOs every year, regardless of where the economy and how it was doing. It was one of the two big wealth creation engines that created the American middle class. The other one was home mortgages. Well, home mortgages we destroyed in 2008, but that was after we had destroyed small cap IPOs. So the SEC promulgated a group of regulations which made a lot of sense at the time, and there are some good attributes of it, called Reg MS in 2005. At that point, we had 9,800 publicly listed companies in the US. Today, our economy is 50% bigger than it was then, so we should have 15,000. We have 3,600. Who got killed and what happened? It was a small cap IPO. So Dave's point in his presentation is not just important for capitalizing growth companies, but for giving people a confidence that their capital markets are trustworthy and working for them. And we can't really be surprised that people have no trust in capital markets when 97% of Americans are excluded legally from the greatest wealth creation engine the world has ever known. And that's just a mathematical fact. That's what this ecosystem can rebuild. And I love hearing that success story from Solomon. I mean, that is exactly the point. So in capital markets, when we're dealing about market structure side, boy, and LiquidNet team totally knows this. They ran this market. They love it. I didn't realize you, Rick, I'm a huge fan of what you guys did. It's awesome. So, you know, I said earlier that we did everything from treasuries to municipal bonds. So the way you differentiate this analytically is the key metric is average daily trading volume, ADTV. So for Ether right now, the ADTV is 7.7%. Well, that's insane. Like the world's never seen an asset that trades like that. Small caps in the United States, 200 million to 4 billion. Currently have an average ADTV of about 1.26% of the float. So you got a $400 million company, 100 in the float, you got 1.3 million trading a day, break that up into average trade. You got one trade every 5 to 10 minutes. Okay, you don't need a lot of technology to do that, but instead they're being lumped into this one-size-fits-all market structure of, you know, Apple, that trades a billion times a second. It destroys the small cap pricing and their ability to get fair pricing on it. It broadcasts all these institutional orders to high-frequency traders that can pick off. So we had a whole withdrawal from the market on it. So that's what has preceded kind of all of these business models, and I love hearing how everybody's approaching it on it. On terms of, so there's two areas that we find will serve. One is the small cap growth company, exactly what you just said. Now our focus is not so much the US market, but taking that model and really globalizing it, because that problem is one that has been, that market adaptation of Reg MS really happened with all OECD countries, and we have all the problems that we have globally, that we have in the US for small cap investing. The second one is the assets that just don't turn over very much, and a call auction is perfect for that. A lot of REITs, a lot of real estate would be far better served at a 5-minute, once-a-day auction than being on New York Stock Exchange. Probably half the REITs on New York Stock Exchange would be better off with a 5-minute auction. Not on TEXURE, on us, but still. So that's really kind of the two asset classes we're headed at, because they are absolutely ill-served by the current market structure.
So one thing which is ill-served by the current private market infrastructure is the lack of access by non-accrediteds. And my understanding is that rules are being considered right now. There's something afoot to update the rules for who is an accredited investor. So today it's you got to make a couple $100,000, or you got to have what is $1 million in assets, right?
Well, they announced the new rules in July.
Yeah, and they are.
Yeah. Well, the thing that's really unique about it is that you can now have certifications are now allowed to act as a accredited investor, even if you don't meet the wealth and income limits. So if you have a Series 62 or a Series 7.
Yeah, but who's going to, what normals are going to go
Tell you what,
that, right?
62 is not that hard to get
if
you pass the test.
So maybe we should start a new company called 62stuff.com or something, right? And we'll run you all through a little class. We'll do it here at the next conference, right? And then all you people who are going to fix all these problems will finally be able to actually buy and sell these things too. So
it's actually not that easy, unfortunately, because you have to be affiliated with a broker-dealer. You can't just take the tests and be an accredited investor. You have to be working for a broker-dealer.
But it's the first time they specifically approved RIA and BD licensing, but they also left open that they're open to other people approaching them.
Okay, so you get my point. Okay,
absolutely. With
basically, right? Nobody can.
Well, what it leaves is open for this ecosystem to put together a certification for an investor for private market growth investing.
Yeah.
And sorry, one other point, Dave. Keep in mind the secondary side. If someone does a Reg D 506C, for example, on a primary side, they're only accredited investors who participate. But 1 year after, under Rule 144, retail investors can participate. So on the secondary side, there's different routes where you can make it retail friendly. And we look at the St. Regis Aspen Resort, for example, which is trading on our platform. They did a $20 million offering in 2018 to accredited investors, 13 investors, mostly out of Southeast Asia. By the time they came on our platform, it was 2 years later, middle of 2020, and then they wanted it to trade under Rule 144, so trade openly. Now there's over 600 investors as opposed to 13 before. The majority of those are retail investors. So there's paths on the secondary side to make it conducive for retail investors to trade in and out.
I have a slightly different view from John on small caps, capital formation. I was part of the SEC group back in 2009 that came up with recommendations. And yes, there are a lot less public companies, but the reason for that is that the institutions, their AUMs have gone through the roof. So when I was at Bear, a $40 million IPO was a big deal in the 90s. And now a $40 million IPO, they don't spend any time on. But a lot of the retail investors are invested through their pension funds or 401ks, et cetera. So they're not shut out from the market. They're part of the market. That's why our focus is institutional BDs. BDs are the actual, for us, distribution network. So we're not going after the retail investors, hey, I'm sorry, crypto guys, I'm a Wall Street guy. And at the end, and I was part of Maker, I'm part of the Maker Mafia. I believe in that. I think it's cool, but I don't think it's practical, in the long term. So, to me, there are a variety of reasons why the number of public companies have gone from 9,000 down to 3,500 or 4,000, or whatever it may be. One of the biggest issues is the institutions have made, small cap when I started, or micro cap used to be $50 million. It's now $500 million if you're publicly traded. And the VC funds are very bright, smart about this. That's why M&A has grown so much. And if you look at the market in terms of the number, the Apples, the Microsofts, et cetera, they have something that private companies don't have. They have currency, equity currency, M&A. That's what's caused a lot of this. I think what at least our approach is, we're looking at this as an evolution of technology. We're not trying to democratize, at least at Oasis, the underlying investors in these types of transactions. We're trying to shift over this new technology as quickly as possible. And I'm impressed with what John's doing globally. We're doing the same thing, but we don't, I'm not gonna get up at 2 a.m. And I need my sleep.
You're not boring enough.
He's still up.
He's still up. And our focus is partnerships. So we haven't announced any of this, but we have a partnership in the EU, one in Asia, one in the Middle East, and we're about to announce one in Africa. So we just don't have the bandwidth to go and from a regulatory standpoint, here in the US it was tough enough. I can only imagine what it is in some of these other jurisdictions. But we do see, and others have been talking about a global marketplace. And I'm not quite sure how, and we've heard this back as well. Yeah, let's have a global marketplace so someone in Asia can trade it. What we can accept today when we launch, and we're already bringing on subscribers, we can bring in foreign investors, institutions, as long as they meet our KYC AML requirements. So we're 365, 24/7. So I'm not quite sure where that global market's gonna be, but when we speak to our Singapore partner, they've got listings over there that they'd like us to maybe do an ADR over here, something along those lines. So I think that market will be there. But we're just all taking a very different approach as I'm listening to this. And I agree with John's comments, 700 trillion, I think our in our collateral materials suggests it's like a $500 trillion market. I'm glad it's grown. But it's a huge opportunity out there. Apple's up, there you go.
So a couple of rapid fire questions here. Right now, you need to use like an OCC bank or like a custodian or state chartered trust as part of the settlement function. In 1 year, will we still need to use that extraneous piece of the equation? Pat? Will you be able to handle
Maybe.
this with the transfer agent? Just a transfer agent in you?
Eventually.
No question about it. Yeah, I think multi-sig is going to substitute at least 20% of what we do in the plumbing of capital markets, custodian, everything else. Multi-sig.
Yep.
Texas Blockchain Council, first one to get a state
Yep.
to agree to UCC 4
They're here
changes to
tomorrow.
enable that. Yeah,
And talking about that.
huge step forward.
Yeah, but we all got an ATS license. What did they tell us about a blockchain as the immutable record?
Nothing.
No, you can't use the blockchain as an immutable record.
Yeah.
So the transfer agents or the issuer is the authoritative ledger. I just don't see the regulators that we're dealing with in a year, but I hope you're right.
No, we're always going to be that for you.
Yeah.
Always.
You'll always be here. Your businesses will be very different. I think you guys have future-proofed your model for this. I don't think a lot of STAs have at all, or custodians. It's going to be a bloodbath, frankly. But
Solomon, what's going to
I
happen?
think eventually. I was making eye contact with our CTO and our VP of product over there just to see what they suggested. But eventually, I can't put a timeline on it, but we're definitely lobbying hard.
That's great. Richard, what do you think?
It'll be a two-speed market. We will get there. It's probably going to take longer than a year because to take advantage of the December 23rd policy statement, you're going to have to go back to FINRA. And that's going to take a while. That's probably going to take longer than a year. And it's maybe a year and a half, I don't know. And even then, there's going to be a period where not all the assets are under custody and you still need to rely on the transfer agent. And who knows where we're going to be in 2 years' time. So I'd say eventually, but it'll be a two-speed market for a while.
Next question, I'll start with you, Richard. When do we go from T+1 to tZero?
it's a plant.
Exactly. Love the plug.
I got to say, it is a great name. Well done to Patrick Byrne or whoever came up with it. Good job with that name there. tZero on texture, you mean? I think soon, actually. I think this is achievable very soon, 2022, I would say. Obviously, Pat said he's working towards it. We're working towards it. I think it's very doable.
So we already settled literally the next day. So that's already faster than the public markets. And we're about to be self-clearing in fourth quarter. So then it will be instantaneous. So give us a couple months.
Couple months. Wow, good. Okay, what do you think, John?
I'd say stay tuned. We'll be
tuned.
announcing that Q1.
Yeah?
Yeah, in terms of the CSD licensing. So,
Super cool.
but yeah, I think it's very, it has to be in the future.
Yeah.
It's creating, one of the things that you constantly encounter developing blockchain and capital markets is you're able to solve directly problems that we've always had to have these end-around, workaround solutions for. And distributed ledger and cryptography is extraordinarily good at absolutely establishing trust in a database. That's even bigger than I think any of us realize. We're continuing to see new applications for kind of a fundamental idea on it. But this is all going to be math at some point.
And you guys are going
So-
for intraday, aren't you?
So we, my whole history, I've been known to sandbag and under promise and over deliver. So I believe it'll be ready August 2021 because we already did it.
Nice.
Great.
Do that. We have time for one or two questions in the audience. I think we've got a microphone. So here you go. Yeah, Tom, you get to ask a question.
I'm just curious, what do you guys think about what's going to happen with all those companies that are on the bulletin board, trade on the OTC bulletin board right now? Was that a target market for you guys?
I'll jump. We're about to be a subscriber. I said this yesterday, and I upset Dave by this, but we're about to be a subscriber to OTC markets. So we are not going after their underlying issuers, but we'll see where it goes. But we are about to be a subscriber there. We think it's a good market.
It's an interesting market. I mean, when Cromwell Coulson took over ATC Markets, that was just this sleazy little smarmy swamp of a backwater. And believe it or not, I mean, he did a tremendous job, and his team did a tremendous job of bringing some kind of accountability to it. My concern with OTC markets up and down the boards is that they're fairly unstructured markets. And so I think we're going to have an opportunity, all of us perhaps, maybe Richard's company, of doing call option auctions on each one of them, because most of those stocks should be trading in little microburst auctions for every couple of hours, once an hour or once a day or whatever. This idea of a continuous flow auction for something that has an ADTV of less than, you know, 0.1% is sort of, it creates this sloppy market. But to answer the base question, yeah, I think we'll be going directly after probably all those companies with the critical advantages we can bridge them to capital and from other parts of the world.
Yep. And we're doing the same. We're already in the process of onboarding a number of OTC companies. American Films will be the first one actually that we publicly announced. We have a number of others in our pipeline. So there are OTC listed companies that are making the transition over to the tZero ATS.
That's awesome.
Yeah, we're definitely looking at it as well. Someone, I won't name them, called the OTC markets a den of vipers yesterday. But I think, they're not all vipers there, and there's some good quality companies, and I don't think that market structure serves them well. I think a private maybe call auctions or a different market structure where they're not as public as they are could be good for some of these companies. I was very intrigued by the presentation before us by Noreen. I think that's a really good strategy, and I'll be following up with her later when I see her.
Did you have a question?
So we have the regulation and the technology pretty much figured out, but we spent a lot of time talking about this chicken and the egg scenario between quality issues and market depth, right, and volumes. Outside of the quality issues situation, what do you guys think in terms of how you generate over, let's call it the next 3 to 5 years, not the next 1 or 2? How do you generate substantial volumes and market depth and bid density? How do you get this market to look better than the OTC markets in terms of trading itself?
To me, it's all about a tipping point. And you need, I look at ETFs. They started in, 2004? They were nothing, negligible. It took like 14 years, 15 years. They're like 70, 80% of the trading market right now. But there was a tripping point when BlackRock got involved and used their entire distribution system. REITs really got started with Reagan, right? I forget, 86 Tax Act, but it took about 25 years for REITs to become what they are today, which is quite common in the public markets. So, I mentioned earlier liquidity, that's an area of focus for us. Eventually, we need a Spotify. So Spotify did a direct listing a couple of years ago. So they opened up that market. Now more tech companies are considering direct listings. So we're spending a lot of our time speaking to some really large organizations about dipping their toe in this space. And once that happens and it's proven out that there's not a hack, there's not some other problems in this particular space, I think that's when. I'm sure all of these other gentlemen also have experienced this. We're speaking to all the big firms out there. Major banks, they're ready to go. The institutions aren't pushing them. But when the institutions next week say, even the GameStop fiasco hasn't gotten them moving. And that's what T+0 really solves. But the custodians, the large custodians, are ready to go. They're accepting Bitcoin right now. Digital securities, digital assets, that's easy, right? It's the same, it's the same smart contracts. They're ready to go. They're just waiting for that tipping point right now. So I don't know when that'll happen, but you said 3 to 5 years. I've been saying for the last year, this is at least a 5-year game. It might be 7 years. Many of you may not like hearing that, but we're in it for the long haul. And I think it's going to take some time. But eventually, again, in 10 years, 2031, looking back, why didn't this happen sooner? I think that's how we're going to look at the market.
Yeah. I want to thank you all for sharing so much. Definitely a historic panel for our industry. And thank you to Oasis Pro, ABE, tZero, and T+1. I mean, in TEXURE Capital. No. You're. No.
That was just vicious.
We have to have fun with this. I know. But I said it's T+1 because tomorrow is the news, right?
Very good, yes.
You see what he did there?
Yeah, that's very good.
You see how he rolled with that?
Very.
That's a professional, okay?
Wow. I'm impressed.
Yeah, that was pretty good. I agree. So tomorrow we'll have 2 panels on ATSs related to regulations and other important elements to like how they function in the regulatory markets, and those will be led by my partner and co-founder Gautam Gujral, who's out here in the audience, who when he was at the SEC in the late 90s was the lead author on the ATS concept release at the SEC. So that should be a lot of fun. Make sure to see all of these folks and their breakout presentations, which are happening according to some piece of cardboard out there. I don't know exactly when. Everything's been moving around, but surely to be amazing presentations. And thank you guys very much.
Thank you.
Okay.
Thank you.